Let's now solve case number 11 from our case scenario discussion. This case number 11 is on the topic of buyback of securities. Can we get started? Start reading. What does it say? Super Limited, a manufacturing company, has the following summarized balance sheet. Okay. In a case scenario question, always read through the questions first to understand what is required and then come back to answer. But we'll take the brave step in our regular discussion to read the case and then answer. But in the exam, you won't do that because I'll solve much more of the question and numbers than what is actually required for answering those MCQs. They've given equity shares of rupees 10 each amounting to rupees 17 lakh. If you divide 17 lakh by 10, you will get 1,70,000 shares. That is the capital that's there in the company. The company has revenue reserves of 23 lakh 50, security premium of 2 lakh 50, P&L of 2 lakh and infrastructure development reserve of 1 lakh 50. They do have two loans and then they've given asset and current asset value also. Super Limited is planning to buy back 35,000 equity shares. They're not asking you how many shares can they do buyback of. They're saying that they are planning to do how many shares of buyback? 35,000 equity shares and each share is of rupees 10. And what is the price at which they are doing buyback? 30 rupees. The buyback is authorized by articles and necessary resolution that is required is also passed. Whether it is ordinary or special, whatever is required, they've already passed the same. The payment for the buyback will be made using the company's bank balance. They're not going for fresh issue of shares. They're using the cash that they have. So they would have to have sufficient reserves to create CRR because the capital of the company cannot reduce. But when you do buyback, the capital of the company reduces to the extent of nominal value of shares redeemed or to the extent of nominal value of shares bought back. Company has to create CRR, which can be later used to do bonus issue, which will restore the capital back to same levels, which is part of its current assets. They have sufficient cash is the point. First question they're asking, as per Companies Act 2013, under section 68 subsection 2, in any financial year, the buyback cannot exceed how much? 10% with ordinary resolution. It should be maximum 25%. Let's see the answers. What is given here? See, option B, 25% of PUC plus free reserves. So the maximum buyback that they can do is 25%. Okay, not all, only this. 25% of paid up capital plus free reserves. Am I right? Very good. Then come to second question. That's a straight question. That doesn't have to be a case scenario. The entire theory that we read in the past is not at all required for this, in fact. Then the information that we have is how many shares. Basically they want us to do share outstanding test. The next one they want to do resource test. Third one they want to do debt equity ratio test. Remember, we will not be doing simultaneous linear equation like how they do in the study material. We have our approach. Now come to the question. You tell me how many shares are there in the question. Basically they have 17 lakh rupees, each share of rupees 10 each. Can I say there is 17 lakh rupees? Can I say 1,70,000 equity shares? Nominal value of each share is 10 and the buyback price is rupees 30. Let's compute the equity of the company. Equity is PUC plus FR plus SP. I'll take paid up capital of the company. Equity share capital of the company is how much? Very good. Equity share capital of the company is 17 lakh. Then I'll take free reserves. What are the reserves that we have? Revenue reserves, free reserve. P&L account, free reserve. Security premium is to be considered. Security premium is not free reserves, but it's also supposed to be considered in the part of buyback. Because whenever we apply, it is PUC plus FR plus SP. Paid up capital plus free reserves plus security premium. Is security premium free reserves? No. But when you try to compute equity, the definition of equity will include paid up capital, will include free reserves, will also include security premium. And this reserve what we have here in the name of infrastructure development reserve is not considered to be free reserve. But we'll do consider these two. Shall I write 23 lakh 50, 2 lakh 50 and 2 lakh? Yeah, 23 lakh 50 and 2 lakh together will form our free reserves of 25 lakh 50. Security premium is 2 lakh 50. Add it all together, you will get equity. What is total equity? 45 lakh. We'll also take computation of debt. Yeah. How much is debt? 9% debentures as well as unsecured loan. Both of them are considered to be my debt. 38 lakh. 9% debentures 38 lakh. And my unsecured loans 8 lakh 50. Together 46 lakh 50 is my debt. Based on share outstanding test, how many shares can I buy back? Number of shares outstanding is 1,70,000. Maximum buyback is permissible is 25%. Do 1,70,000 into 25%. At max, I can buy back 42,500 shares. Understood this? I cannot buy back more than 42,500. If I am not able to pass special resolution, then I can buy back only 10. That is different story. We are not touching that. Remember that? Then the next one is resource test. Maximum resources utilized for the purpose of buyback cannot exceed 25% of paid up capital plus free reserves plus security premium. That is basically equity. Have we computed equity? Yeah. How much is it? 45 lakh. I'll write 45 lakh here. How much is the maximum funds that can be utilized for buyback? 25% of 45 lakh. Do 25% of 45 lakh. 11 lakh 25,000 is the maximum money that can be used for buyback. Each share is bought back at rupees 30. So divide 11 lakh 25 by 30, you will get maximum shares that I can buy back considering this test. How much is it? 37,500 shares can be maximum bought back using this resource test. This is the maximum limit. Are we going to do 37,500 or 42,500? Whichever is less, we need to comply with both conditions. Plus one more. What is the next one? Debt equity ratio test. See, debt equity ratio test don't apply simultaneous linear equation. Take equity, deduct 50% of debt. Whatever you get, divide it by nominal value plus buyback price. That's it. You'll get the answer. You got this? Yeah. If in case you have any difficulty, please do revise the entire topic of buyback by way of this quick revision video. Once you do that, you will get to know the complete understanding as to how the debt equity ratio concept works. Let me go ahead. Tell me how much is equity before buyback that we just computed using the table here. 45 lakh. After this, I am going to take 50% of the debt. What is 50% of the debt? Debt what I have is 46 lakh 50. 50% of it is 23 lakh 25. After doing buyback, our equity should be minimum 23 lakh 25,000. So it can reduce from 45 lakh to 23 lakh 25. How much is the maximum reduction? 21 lakh 75,000. So equity before buyback is 45 lakh. Equity to be maintained at 50% of debt, which is 23 lakh 25. So maximum reduction in my equity is 21 lakh 75. Every time I buy back a share, nominal value of the share bought back will reduce my share capital. Buyback price will reduce my CRR and security premium. So I'll divide this 21 lakh 75,000 divided by buyback price plus nominal value. When I buy back, nominal value of share capital will reduce. When I buy back, nominal value will be CRR created, so reserves will decrease. Premium paid will be reduced from security premium, so that will also reduce. So denominator is nominal value plus buyback price, which is how much? 30 plus 10, 40. Do 21 lakh 75,000 divided by 40. 54,375 shares is the maximum buyback that is permissible as per debt equity ratio test. So considering all the three options, maximum buyback is 42,500 or 37,500 or 54,375, whichever is less. Let's see what have they asked. The second sub question, what have they asked? Second question what they've asked is maximum permissible buyback as per share outstanding test. We did share outstanding test. How much is it? 42,500. So the answer is 42,500 option B. Wait. Third case is what is the maximum number of shares that can be bought back according to resources test. As per resources test, we can buy back maximum 37,500 shares. So I will take 37,500 is the maximum buyback. And according to debt equity ratio test, 54,375. That is my option. Got this?